Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So I just came back from work and found out Air Products and Chemicals is down 14%. I want to know exactly what's happened. I'm going to go over the financial details of this company. There are 4 companies that I own in this portfolio that are reporting this week. One of them is Air Products and Chemicals, Cummins is in another one, and then S&P Global as well as Hershey are reporting this week. So I want to see exactly what the situation is with this company, because I was in the positive when I went to basically work this morning, and right now I'm in the negative. So I want to find out exactly what's happened and why it's down actually 14%. As usual, if you like the video, of course, if you find any help in this video, please like it, subscribe to the channel, let me know if you have any questions. As well as that, of course, you join us on the Patreon account where you can actually support the channel, inshallah. Right, let's have a look at the year to date. The company is down 25%. Sorry, year to date is down about 19%. For the 1 year is down about 25%, and it has a forward PE of just less than 20 right now. And the reason the company is down a lot today is this: they missed EPS, they missed also revenue, okay, just for this quarter. As well as that, they actually guiding lower. So the expectation for this company by the end of the year 2024 was $12.96. That's what the analysts expected. They're saying 12.20 to 12.50 is what we think we will make. Okay, so a lot of it, Americas was actually down. In terms of Asia was actually up about 2%. And now I'm going to show you the report that they've just released. And as you can see here, this is just came through. And a couple of things, you can pause the video and look at how the management philosophy there. But for me, this is the part that I'm interested in. Okay, so result basically in terms of guidance, the reason why the guidance is actually lower is because the company expects basically some sort of a Asia weakness, especially in China. Helium volume shortfall, cost of headwinds from sales of equipment project, and currency devaluation in Argentina. These are the 5 things the company is blaming, okay, and saying these are the reasons why we're actually guiding lower, and this is probably one of the things that are affecting them right now. So also, again, they've talked about it here, weaker Q1 results, which is what we're looking at right now, continuous softness in Asia, softer helium outlook, as well as the geopolitical, as well as the economic headwinds that's happening around the world. It's affecting the company. Now, this is not a reason why the company should go down 14%, in my opinion. This is 2024. Even if we write off completely 2024, 2025 and after that, the company should be absolutely fine. But right now, a lot of people think, okay, this is the end of this company, and for that reason, they're selling it. To me, definitely not. Let's have a look at. If you stay till the end of the video, I'll tell you exactly what I'm going to do. So as you can see here, in terms of the EPS growth, you can see about 11% since 2014. So that's absolutely massive growth. That's wonderful to see, especially for this type of business. And dividend history, 40 plus years, consecutive years of dividend increases. That's about since 2014, they've increased it from basically 9%, and that was $3 to right now $7.50 per share. Is basically about $7 basically is what they pay right now, which is quite nice if you think about it. So they increased the dividend to $1.77 per share, announced in January 2024, which is, again, it was 1.1%, but it's still something, right? So in terms of the result breakdown, I want to talk about the different basically sections. So in terms of Americas, you can see here, this is 2023 Q1, this is Q1 also 2024. So we're comparing these two, and if we compare it, as you can see here, the Americas were down about 10%. That's one of the reasons basically this stock is down quite a bit. And if you compare it to Q4 of basic, which is the last quarter, is down about 7%. So these two reasons, so the fact that year on year is down, and then from the last quarter we're down about 7%, and for that reason, that's probably one of the reasons the stock's down. If you compare, if you look at Asia, for example, 2024 Q1, you can see it's about 2% up, but from last quarter is actually just down 1%, which is not huge if you think about it. Europe was down 8%, but from last quarter is up about 3%. Again, nothing huge to worry about in terms of that. Now looking cash flow focus, says here supports dividends and capital deployment. Of course it does. And EBITDA was $4.7 billion after they paid some taxes, the maintenance, capex, and all of that stuff. Basically, they had basically $3.2 billion of free cash flow. That works out about 14.46 per share, which is absolutely fine. They paid $1.5 billion in terms of dividends and investable cash flow of 1.6%. Let's call it $1.7 billion, which is absolutely fine. And I'll come back to cash flow because the main basically worry for me about this company is that cash flow right now. So now going here, I'm gonna check a few things in Simply Safe different dividends. As you can see, they have a market cap of $57 billion. In terms of the dividends, is actually safety is a 95%. I'm not sure what's gonna happen. Let's see if once they updated their software if it changes or not. But you can see the dividend yield went from 2.something to 3.18 today. The payout ratio is right now it's done 60%. They haven't increased it much. Like I said earlier, is 1.1% and 10% in terms of the last 10 years, which is quite nice. So this is a little bit worrying because I do like to have companies that raise their dividend, you know, at least to 5%, 6% every single year. But again, I'm not, every 5 years, but I'm not really worried too much about just the latest one. Okay. InshaAllah, we'll see what happens. 41 years of increase in that dividend, and you'll get basically just over $7 per share of this company that you own. Right now, it looks undervalued because when you look at the 5-year average is 2.25. Right now, we're looking at about 3.18, which makes it, to me, that is very attractive right now. And 5-year average of basically in terms of PE, forward PE, you can see 24.8. Right now, we're looking at about 17, and even cheaper than the sector as well when you compare it with the sector. Now, I'll show you free cash flow payout ratio. That's one of the worrying part, 160% down. Okay. And if I show you now the free cash flow for this company, you will be shocked because it's negative right now. So this was my concern moving forward with this company. However, this of course only happened in 2023. So I'm of course a long-term investor. I'm not really worried about what might happen just this year. I'm looking forward to seeing what the company can do in the coming years, inshallah. So that's one of the things that you need to take into consideration if you're actually buying this company. Shares outstanding, they have basically been stagnated for about 4 years now. They haven't bought back any shares, and total sales from 2014 they were 10.4, right now 12.6. so there's not much of a growth, but they have actually gone up in the last couple of years, so they're actually growing massively. Return on equity 16%, return on invested capital about 9%, which is fine. Operating margins of 21%. Free cash flow margin, we've already seen the situation with the cash flow. But when it comes to net debt to EBITDA right now, you can see normally we're looking for anything below 3, but right now it's 1.71, which is absolutely fine. Right, if we look at Yahoo Finance, growth estimates for the next year was about 9, almost 10%, and then for the next 5 years it was about 10% each year for the next 5 years. Let's see what happens after these analysts here. Okay, one of them, as you can see, they've actually downgraded, and basically in November of this year. Let's see what they all say. So the next couple of days they will update this, and then of course I will come back and do a quick update on the company, inshallah. Another website that I like to use is Morningstar. They haven't actually updated there yet. Of course, it's just reported this morning. So I'm going to wait and see what they say in the next couple of days, and of course take that into consideration. But of course, what am I going to do with the company right now as we speak? If you haven't liked the video yet, by the way, please like the video. It really genuinely helps the channel. And of course, as always, like I've said to you guys, join us on the Patreon account. That helps the channel too. So right now, as you can see, I own 18 shares of this company. I'm sure you can see from just what we've just seen, I don't think the company, basically this stock is a sell right now. Because of one quarter, because of guiding lower for the end of the year, and if you are a long-term investor, meaning you can actually, do you know what Warren Buffett used to say? Would you be happy? I think he said, I'm kind of paraphrasing here. He said, if you buy companies that you will be happy to hold if the market shuts down for next 10 years. So you don't have access to the basically your account, the market shuts down for the next 10 years, you're happy to own the company. Remember, what we're doing here is not just to buy a ticker symbol where that goes up and down, because right now when you look at the S&P 500. There are companies that are up today for absolutely no reason. This company is reporting today and is already up 4%, 5%, or maybe it's reporting tomorrow, whatever. Nvidia is just up for no reason today. So these are people that who are just betting on what things going up and down. But if you know the company that you own and you actually understand the business model, you know they're not going to go away. This company has a contract with NEOM, which is what Saudi Arabia is building for the future kind of thing. And they're the main company when it comes to providing everything that basically that's needed for that project. So in my opinion, for 1 year, it doesn't really matter. So what am I going to do? I'm going to add to my stock, basically to my portfolio. Again, I'm buying just 2 shares. I already own 18 shares of that. My current average is basically $267 per share. Currently it's $221. So I'm going to send that to the market and I'm going to keep buying it every single week from now on. You will see me, inshallah, adding to it as much as I can while it's still undervalued, because this is the lowest it's been basically for a few years now. So I'm happy to actually keep dollar cost averaging and keep going, inshallah, every single month and every single week moving forward. That's what I wanted to share with you guys. Again, because I'm buying this, please don't take this as a advice or whatever. Do your research, find out a bit more information about the company, and of course then do what you need to do. I'm very bullish on this company. I like the company. I like the business model. I understand what they do, and the most important thing for me is that they're down 10% right now. So I'm going to take advantage of that because I've been waiting for this moment for quite some time. If you heard me before, every time I did portfolio update, I've always talked about this company and the fact that I felt like it was undervalued, but at the same time I just felt like there were other opportunities somewhere else because I didn't want to average up, and I did it recently. So I'm happy to actually buy now in the dip. So that's my plan, inshallah. This is what I'm doing. I hope you're enjoying the content. If you are, please join us on the Patreon account and like the video, subscribe to the channel. Have a wonderful day. Assalamu Alaikum.